Here we are, and it's not lined up. Here, let me make it line up. Let's see, let's go this way. And let's go this way. That's not bad. How's that? Okay, here we are, and we are doing homework problem, chapter 2. And the first thing you have to do is do your adjustments, and I have to tell you, or not adjustments, you have to do your transactions, I'm sorry. And you have to make them into a journal entry. You may hear puppy dogs barking because I haven't got them put outside. So, first one, April 1st, and this establishes the business. The owner gives $80,000 and $26,000 in office equipment. And he receives, in exchange, $106,000 worth of common stock. So you have to create accounts, and you're going to create cash as a debit and office equipment as a debit because they're both assets, and to increase them, they're debited. Now, if you think about the accounting equation, you have common stock on the right-hand side of the equation, and it has a credit balance. So you have a balanced transaction here. You have, let's kind of make that smaller so I can get more in here. And let's do that. So you have established your business right now. If we look at the accounting equation, we have two assets equaling $160, equaling liabilities and owner's equity of $106. So that takes care of one. I wonder if I can check that off. I don't think I can. The next one, the company prepaid $9,000 cash for 12 months of rent. So, we haven't used that rent, we've just prepaid it. So whenever it's prepaid, you're going to create an account called prepaid rent. You're going to debit it, because it's an asset, for the amount, which would be $9,000. And you paid cash for it, so you're going to credit cash, because that decreases a debit, or an asset. So that one's probably pretty straightforward for you. You're going to look at equipment and supplies, and that and AP it looks like. In your next one, the company made credit purchases for $8,000 in office equipment and $3,600 in office supplies, and payments due within 10 days. So what accounts are involved in this? Well, I bought on credit, so that's accounts payable. I am increasing an asset called office equipment and an asset called office supplies. So I need to increase those, right? So they're debits. So I have equipment here, and that amount is $8,000. I have supplies, which is $3,600. If I add those two together, that means I owe $11,600. So that establishes that transaction 3. Now let's look at transaction for April 6th. And it says a company completed services for a client and immediately received $4,000 worth of cash. Oh, that's an easy one. Cash increases $4,000. That was the easy one. So what they've done is provided services or revenues. Now revenue is on the right-hand side, and a revenue increases equity. So an equity has a credit balance. So revenue will be credited for $4,000. Kind of get the gist of where this is going? Let's move this down so I can move that up. So now we are on the 9th. If you look at the 9th, the company completed a $6,000 project for a client who must pay within 30 days. Well, it doesn't tell you this, but they charged it. So that would be an accounts payable, or an accounts receivable, I'm sorry. The client charged it. So that becomes an asset for you of $6,000 and a revenue because you provided services of $6,000. So on the 13th, the company paid $11,600 in cash to settle the accounts payable created on the 13th. So they're paying this right here that they created on the 3rd within 10 days. So that's going to decrease their accounts payable. Remember, accounts payable has a credit balance. If I want to decrease it, I credit or debit it. And I'm going to decrease my cash because I'm taking cash out to pay for it. And we just kind of proceed just like that. Now you've got some more coming up here. Let's move it down. There's quite a few entries here. Now here's another prepaid. It's a prepaid insurance instead of prepaid rent. And this is on the 19th. And it says it bought $2,400 for a 12-month insurance policy. Well, let's see. First of all, I know I paid out $2,400, so that's the credit. And I know I bought insurance, which is an asset because I haven't used it, at $2,400. So now we look at the 22nd. Can you just see how this proceeds? I'll do one more and I'm going to let you finish off the rest because these aren't difficult. The company received $4,400 in cash as a partial payment for the work completed on April 9th. Well, what happened on the 9th? Oh, they charged something in accounts receivable. So I'm receiving cash of $4,400. Which means I increase my cash account, but I also have to take that out of my accounts receivable. So I'm crediting for $4,400. So that kind of should flow fairly well. Now the part that is probably a little bit confusing is going to be, let's see if I can pull this out. Okay, that's out of the way. Now here's the part that might be somewhat confusing, a little bit. You finish off all of the entries and then you transfer these journal entries into the general ledger, which is this. Now our very first one. Okay, cash is a debit. It's the same thing you have here, only now you're separating it out. I'm going cash to $80,000. I'm putting the amounts in the actual accounts. And I need to increase office equipment. So I need to come down here. So office equipment gets increased by $26,000. And I need to find common stock and see how we're doing a credit now. Now, before I go any further, I need to give a balance to these. So there's nothing to add or nothing to subtract from this one. So this one has a balance of $106,000. I forgot a zero. And we're going to go back up and do the very same thing to equipment. Have a debit here, so it has a balance of $2,600. Is that 1,000? Yes. I seem to have trouble with the zeros right now. So sorry. And let's go up to cash. And that's got a debit of $80,000, so it has an $80,000 balance. Now I've left some numbers. This one in particular is what you should end up with cash as a balance when you get all the way done. Down there. I think that's the only one. So then you would go to your next, your next entry, which is prepaid rent debited and cash credited. So you would find prepaid rent, And it's right here, and we debited it for $9,000. And we credited cash for $9,000. So now I'm down here on line 2, and I'm doing a credit. So that means I have $71,000 left, because a credit subtracts from a debit balance. And where's the prepaid rent? It was right here. And we need to increase that balance to $9,000. And you just proceed through all of the journal entries you've created, right here, applying those to the general ledger accounts that are applicable. Then, and that's going to take a while. It's not a favorite thing for many people to do, but that will give you and establish balances for each account. And this becomes particularly important when you want to make sure you haven't made a mistake and you're going to make a trial balance. So what a trial balance is it's looking at all the debits and credit balances in your general ledger, all of your accounts. So you want to make sure they balance after you've done that long list of entries. You may have made a mistake and you want to find out. Another thing that you can do is after you get these entries done, I would come down to the bottom of this and make sure all of these balance. I would add this whole thing up and this whole thing up and come up with a balancing number here, just to make sure that you don't have to go back and look at that. Now for the trial balance. So you just start with the very first account, which is cash, and what is its debit balance? Well, I told you what that one is. It's $59,465. And you will copy all the accounts down and put the appropriate balance in. Office supplies is going to be a debit. Prepaid insurance is going to be a debit. Prepaid rent is going to be a debit. Office equipment is going to be a debit. Do you notice all the assets have a debit balance? Accounts payable, what's that going to be? That's a liability. So it's got, this is where you're going to start with liabilities. And liabilities have credit accounts, correct? Common stock, that's got a credit balance. Now we come down, there's a puppy dog, come down to dividends, and dividends come over and have a debit balance. Service, your revenue, you're going to pull off. What kind of balance does the revenue have? It has a credit balance. And finally, your expenses, which are utilities, is the only expense you have. Will have a debit balance. And once you pull this off, okay, you're going to add these up and get a total here. And they should balance, and that way you know you have done everything correctly in the general ledger. So I hope that has helped. I'm going to get this turned off and get my doggies to shut up and get this sent off to you, okay? Email with questions. Thank you.